All right, guys, so it looks like the Fed just completely screwed all of us over. I mean, look at what happened. I mean, they were basically pranked on live TV and they gave away a ton of information there that impacts you as an investor. So, what all was it? What are the implications? And how is it going to actually impact the stocks that you own? We'll talk about all that today, guys. Don't worry about it. Just right after you gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And remember, the Tesla dip sale is going on, and honestly, hopefully Tesla pulls out of this so that way we don't have to do it anymore. But Tesla hasn't pulled out of it yet, so you still got time to get in at a massive discount for my group. You get 5 free courses, you get all my buy and sell alerts in real time, my watch list with price targets, you get tons of exclusive videos and just a whole ton of comment, guys. Check out the pinned comment down there and see if the membership's right for you and see everything that you get. So first off, let's just address, basically Jerome Powell talking to a bunch of Russian pranksters here. I don't know. Let's just get into it. There's a lot to get into. Now, despite all the ridiculousness and everything else, he did actually give some very, very insightful answers into what's going on, what they're doing, what they're thinking, everything else. So I want to make sure I address those too, not only just the silliness of all this in the first place. So the first point that I really want to make is, it is just, honestly, it's embarrassing. I don't know how else to say it. I don't know how else to put it. It's just quite frankly embarrassing on all sides. Now, I know some folks will want to take it political. I have no interest in that. You guys know I don't do politics. It's embarrassing. I don't know how else to say that. The fact that a prankster can get a hold of the Fed chairman and somehow work through all the different wickets it takes to get on a call with the Fed chairman is pretty impressive. I mean, I'm honestly kind of jealous that I didn't think of it. I didn't try to get him on my channel. Can you imagine how many views I could get or how much I could blow up my channel, at least get attention to my channel? If I could get Jerome Powell on a video call, that's incredible. I guess I'm kind of upset that I didn't think about that because I didn't think this was actually possible, but here we are. And on top of that, it was Russian pranksters. It's not like it was anything else or any other. I don't know. I don't have a good reason for it. I don't have a good excuse outside of the fact it's quite frankly embarrassing. Now, did he get on there and say anything just crazy? Well, we'll get to what he said here in just a second. So there was nothing, he wasn't giving away national secrets or anything like that. But on the other hand, the fact that you could just get access to him that easily without really a lot of checks and double checks and stuff like that, it's just not a good look to say the least for the Fed. In regards to that sort of access to the Fed chairman in the first place. So that's kind of point number one right there. It's just not a good look. Now, the second point I want to make is for all those folks who want to guess what the Fed's going to do, and he's going to do this and he's going to do that, and he's going to all this other stuff like that. He basically reiterated we got 2 more 0.25 hikes to go, which they've been saying from the start. That's exactly what's on the table. And that is the most likely scenario each time. So all these other narratives around what the Fed's going to do, and we'll talk about that a little bit more here in just a second. But he basically reiterated and gave us the answer to the test that we got 2 more 0.25 raises to come. Basically one probably this week and then one probably the following, the next meeting. And then after that, it's a wait and see game from there. So don't let the narrative fool you. Don't let Wall Street run off in one direction or another direction or twist you here or twist you there. He basically gave away the answer right there. Even if it was to Russian pranksters, the point was he wasn't trying to prank them back. He was giving real answers. He also stated that he fully expects that we will get the slowed growth that they are looking for or a mild recession, which they've been saying from the beginning. And I know we have talked about that for almost a year now, that the Fed, actually it's probably over a year now, the Fed is actively trying to induce a recession with this. That is what they're trying to do. Make no mistake about it. Everybody keeps predicting this and that, and they're doing this and they're doing that, and they're going to ruin this and break that. Whatever the case is, the facts are, and he reiterated right here in this interview, they are trying to induce a recession. They are trying to slow down the economy. Now, they don't want it to be a great recession type scenario or even a bad recession. They want it to be a very, very mild recession. But nonetheless, they are trying to induce a recession. And he reiterated that right here again. I know a lot of folks don't want to hear that. That's not necessarily what they want to see, but that is the reality of the situation. He also made a point to talk about the labor market and said he wanted to slow the labor market or induce more unemployment. Again, it's another thing we've been talking about. I know that one for 9 months now because it became a big deal over the summertime, that he is actively trying to induce unemployment, and they're not succeeding right now. They need the labor market to cool off, and they are actively trying to do that and still actively trying to do that and induce that, whatever the heck you want to call it, slow down in the labor force, slow down in that unemployment. We've talked about it before. We are supposed to be, 4.5 is about that natural rate of unemployment where you want to be at. And we've been consistently under 4 and in some cases actually trending down further. this past year. So the exact opposite of what you would expect to happen and of what they want to happen with the labor market. So those are all markers as to why they're going to raise the rate more and possibly keep those rates up higher than you think that they are, because those are kind of required to basically stamp out the big problem, which is, of course, inflation. And here it is right here. I wrote down exactly what it said in regards to inflation. He basically said the only way to slow inflation is inflation, if I could talk. The only way to slow inflation, I can't even read. I don't know. It's a problem. Anyways, the only way to slow inflation is a period of slower growth. So the economy can cool off, labor market can cool off, so then wages can cool off. He basically said that is the only known way that they know how to actually lower inflation and keep it low over the long term. So let me kind of translate that for you, because I wrote a translation too. Slow the economy, meaning slow down GDP, right? We don't need to see GDP growth at 3 over 3, which, right there, you want it kind of in that 2.5 range. Somewhere in the 2s is good. We've been at the 3s for the past couple of quarters here. It looks like we finally slowed down this quarter. Step 1, what they need. We're not in the negative territory yet, which would be recessionary territory. We're just slowing. So we are getting that finally. More unemployment, meaning they want that unemployment rate to creep up. And he has said in the past, he's willing to accept, in his words, up to a 7 before they start really thinking that they broke something. So there again, when it gets up into the 4s, maybe up into the 5s, they're still not going to feel that they're breaking something. And hopefully by then, inflation is stamped down to a point to where they kind of go, okay, we can back off here and we can afford to let off some of the pressure so we don't let it get any worse than up in the 5s, lower 6s, something like that. But that's their words, not mine. That's the only thing I can give to you guys is what they've been saying. And then kind of the final point there is if you have more unemployment, wages are going to cool off, which means more people are looking for jobs, which of course means that wages will have to come down because there's more workers there to fill the jobs. Right now, there's not enough workers to fill a job, so they're having to pay more to draw people in to, take those jobs, which of course leads to inflation in the end. So that's another thing that they want to have happen is, hey, we can just get more labor, more unemployment, more people looking for jobs. Some of those, they won't have to post crazy numbers to get somebody to take a menial job. They can bring it down a little bit and start paying probably more of what's a normal wage there on some of these jobs. Not all the jobs. Some of the jobs still need to come up. But, we're talking very, very general here. So that way, basically, wages can come back under control and help with the inflation fight. So on to the Fed here and what is most likely to happen and what I will do personally, guys. And please don't get anything twisted in this whole narrative and everything else. We should all expect the 0.25, and I don't expect anything else to happen. I didn't expect that prior to this little leak, this little prankster call coming out. I haven't expected anything different for the past couple of times because that's exactly what they said was going to happen. And I don't expect anything different going forward. Now, of course, if something different happens, let's say they do 0.5 or they don't do any at all, you can imagine market's going to freak out at 1 and 0.5, and it's going to absolutely run if they come in and they do 0 this time around. But I see no reason for that to happen again. So 0.25 is the most likely scenario. And please don't fall for any of the narratives that are going to pop up either before or after this. We'll see what he says. But in general, every single time after they've made their announcement and then he's come on and done his interview and everything else, immediately, no matter what he says, no matter what he does, no matter how many dot plot graphs they give, no matter how many clues, no matter how many times he's just told us, hey, we're doing this next, immediately everybody starts to speculate around it, and you've got to stay away from that game. Last summer, it was the Fed's done. No more hiking. Look, inflation peaked. There's no reason for them to hike anymore. They can let off the gas and not continue to raise. And we call BS right here on this channel. We talked about it incessantly that no, that's not true at all. He's going to continue to raise. And of course, that's exactly what happened. That is exactly what they continue to do. And the same exact thing happened in October. The same narrative came out that, hey, they got to be done. They're going to break something. Something's going to go wrong. They're not going to raise anymore. And then once again, we called BS right here and basically said, that's not true, guys. They're going to continue to raise. They're going to continue to do their thing because inflation, although it is looking good, it is nowhere near where it needs to be. And they're not going to repeat the sins of the 70s, which was whenever it started to inflect down and things started looking better, they let off the gas and it shot right back up shortly after that. They weren't repeating that. And the same exact thing happened in January. Same exact thing again. They've got to be done. There can be no more. They're going to break something. All these other things like that. And once again, we talked about it, called the BS. Hey, they're giving a different signal. They're saying something different. Right now, there is nothing broken. So there's no reason to think that you cannot continue on with your plan, reach that point, and then pause from there and hold it longer. There was even other talks that, hey, whoa, everybody was screaming that they're going to cut the summer. Right? Oh, May, June, they've got to start cutting then. It's going to happen. And that's just not true. Now, some of those folks have moved a prediction out to, you know, October, November, or, you know, September, October, November, that time frame instead of June. Cool. We've been playing the same game with earnings recessions forever, right? We've been keep saying, oh, earnings apocalypse is here this quarter since June last year, and it's gotten kicked down the can every quarter since then. And once again, we're here in another quarter, and it's getting kicked down the road once again. At some point in time, you kind of go, wow, I mean, you're gonna be right 6, 7, are you gonna be wrong 6, 7, 8 times in a row, and then finally, when you're right once, go, oh look, I was right all along. See, I told you guys, recession, earnings recession is coming. That's a silliness. You were wrong the previous 8 times. Who freaking cares? You're 1 out of 8. Stupid. Just go with what we know and what we see and what's happening in front of us and what's actually happening on these earnings calls. Listen to those CEOs and what they're saying. Sure, everybody is taking a cautious tone and making sure they are prepared for a worst case scenario. But right now, it's not like they're just, cranking down guidance like crazy or guiding towards huge misses or huge losses. Everybody's guiding towards, hey, things are going to slow down. We expect things to slow down, but nothing crazy. The bank, all CEOs all basically said, hey, there's not going to be nobody sees a massive recession and this horrible, terrible depression type scenario coming. Nobody sees it. Doesn't mean it can't happen. Doesn't mean something isn't there that none of us can see. But the folks who are viewing all this data and viewing everything in real time and who have actual, information, actionable information in regards to finances, how the money's moving, how people's personal balance sheets look, how corporate balance sheets work, not just companies that are public, but private companies as well. All these folks are all saying, hey, we don't see it. We don't see it the same way. Doesn't mean they can't be wrong, but there's so many factors lining up for this to be correct and for this to be a nice slowdown or a mild recession, somewhere right up in that range right there, is perfectly plausible. Now, that wasn't plausible to everybody 9 months ago. It was to me. I was just kind of like, I don't see it, guys. We're still continuing to grow. Once we got those two little, which is probably like the weakest recession we ever had, the 2 consecutive quarters of GDP last summer that went down. After that, it's been red hot again. It was up over 3, up over 3. Now we're back, under 3 again. Thank goodness. We need the things to slow down. But are we going to see 2 consecutive quarters of GDP negative? Maybe, possible. Is it going to be this crazy, wild, negative 3% or 5% or whatever the case is? I don't think so. Just don't see any way that we get there, that we slow to that point, because there's nothing on the horizon that is pointing towards that happening. Everything is holding up better than expected. Consumers are holding up better than expected. Everything is holding up better than we all expected. And that's okay. There's nothing wrong with that. But it also means we need to be careful as we're following these narratives as we come out of this. We can debate this all day long, but he has been cleared, I'm talking about Jerome Powell, from the start in regards to what they're doing and everything else. Now, we can debate whether or not he's messaged it properly, which I think he has. But I understand if some folks don't like what he did. Absolutely agree, and I think they would admit to they missed the boat in the first place. But in regards to correcting course and getting everything on track and communicating correctly, he's done a great job of that so far. That doesn't mean they can't screw up. It doesn't mean that they've been perfect. It doesn't mean that everything has gone right along perfect to plan. But as of right now, they've basically managed to keep things controlled and keep things, continue to increase rates at a crazy pace, but not really break anything all that bad. Look at the major, the unemployment, the wages, anything you want to measure. They haven't broken anything yet. Now, I think real estate's coming this summer. Obviously, there's been a significant slowdown, and until we have inventory hit the market, which we don't have yet, you're not going to see prices crash too far. You're just going to see home sales slow, which I think is going to be a big impact there. But he's been talking about for 6 months that he knows, and he said, hey, real estate's going to hurt. They're going to take some pain while we try to get inflation down. I'm sorry, but that's just part of what we have to do in order to get inflation down. So it's, again, not like he didn't message this months in advance. He did, and he absolutely said it's coming. Now, whether people chose to ignore it or listen to it or continue right on pressing, who knows? I can't judge that at all. But I can't say that, oh, he didn't tell us this was going to happen, and then now look at the real estate markets. It's terrible shape, and what are they doing? How do they not see this? It's like he did. He told us about it 6 months ago. So from that standpoint, they've done a good job of messaging. Remember, last summer, we were supposed to have the super bubble of all bubbles, blah, 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 whatever come. And it didn't come. So it was just kind of delayed until the fall. And then it was, hey, 2023, that's when everything's just going to fall apart. I mean, everybody, it was even bullish YouTubers. Everybody was negative on it. We weren't here on this channel because I was kind of like, there's no basis for that. Why would 2023 be any worse? I mean, I don't know what else could pop up in 2023 that we didn't already experience in 2022. 2022 was that year where we had crazy war out of nowhere. You had, record inflation. You had record rate raises at a pace we've never seen before. I mean, everything that could get thrown at the market has gotten thrown at the market last year in 2022. 2023, what else could you throw at it? I'm not sure. Now there could be something out there, but it just doesn't meet the narrative of what everybody is screaming. Basically, there is no basis for any of that noise except for this chart right here. And clearly the super bubble depression annihilation of the entire penguin population is guaranteed by this chart that has accurately predicted every penguin extinction since the beginning of time when it's mixed in with the stock market. So it has to be true again, right? I mean, that's what it was. Everybody's throwing up a chart and telling you it's always been accurate 100% of the time, predicted every depression, every crash, whatever, since the beginning of time. And we saw that with individual stocks, right? I mean, Meta was going extinct like the penguins were. I mean, that was the narrative at the time, and it had lots of pretty charts and graphs and everything along with it. And us, here on this channel, we were busy buying it in the 80s and 90s all day long because it was the steal of the century. And now, all of a sudden, it's flipped around, and this is the greatest turnaround of all time. I've seen that out there, and no, it wasn't. It was the greatest opportunity of all time when it got down to those prices. We talked about it while it was happening, and I didn't care who blasted me or not. A lot of you guys were paying attention, doing your due diligence, and you saw the same thing I did. It was some of the easiest money you were ever going to make in the stock market. It was just right there for the taking. All you had to do was be willing to be wrong in the short term, and you were proved out right over the long term. And really, it's on the beginning of its run, of a multi-year run in this stock, as long as he continues to execute like he is. So there's no reason to run to those narratives and run to those charts and run to everything else. When there is fear and everybody is running away from stocks or a particular stock or the penguin extinction or whatever, that usually tells me it is the perfect time to buy great stocks. And remember, if you don't know how to do anything we discussed today, or you want to learn how to do evaluation, you want to take 5 courses for free to include real estate and all kinds of stocks and everything else in the world you could think of when it regards to finance, and you want access to all my buy and sell alerts, my watch list with price targets. I mean, heck, you can slide into my DMs, you can jump in on our Q&As and ask me anything you want. And actually, there's a ton more in the group. Make sure you check out the pinned comment down there and make sure you get your Tesla dip sale price that's significantly discounted before it goes away forever. And click this video here if you want to see exactly what I'm buying in this market, and click here if you want to see exactly what my plan is for this market. So thanks for watching, and we'll see you in the next one.